So we'll read this question. Prepare a code for supplying 1000 units of a product which yields a similar profit percentage. Okay, so we want to, so this is an existing information, okay, already existing information. We have to find out what would be the cost, okay, for for producing, okay, to produce or to create a quotation for 1000 units, okay, for 1000 units, okay. So this is a basic information, okay, based upon which we have to create the quotation value. So first we'll create for this, then we'll think about the quotation. So the number that they have given is opening stock of raw material is given, closing stock of raw material is given, materials used is given, materials used, I think it would be materials purchased, okay, I think it is somewhere wrong. So materials purchased is given, factory wages is there, non-production cost is there, so non-production cost is admin expenses, and finished units, opening stock, closing stock is there, sales is there, and units produced is there, okay. This information is for the quotation, okay, so that we'll do later. So we'll start. So this is 10,000, purchase is 1,40,000, closing stock is 15,000, so materials consumed is 1,35,000. Direct labor is 1,30,000. Okay, put together this is the prime cost. Factory wages is also given. There's no opening or closing WIP, so 3,95,000 would be the works cost or factory cost. Non-production overhead is given, that is 15,000. So cost of production is 4,10,000. Done. So till that we got. So we have some opening stock and closing stock. See, opening stock is not there, so we don't need to worry about that. Closing stock is there. Okay. So we have to find out the cost per unit, or else we can't like work it out from here on. So we have to find out cost per unit. So let's find out the cost per unit. So 4,10,000, right? 4,10,000 has been the total cost of production, and this is for how many units? The units produced is 1,500. Okay, for 1,500 units, this is the cost. That is 273.33 is the cost. So 273.33 into how many units is closed? Closing stock is 150 units. So you can copy that and you can paste it here. This is the value of closing stock. So closing stock value is 41,000 approximately. Okay, it's 41,000. So let's get the cost of goods sold. Cost of goods sold is 3,69,000. 3,69,000. So we got our cost of goods sold. So sales have been for 3 lakh amount. Sales is 3 lakhs. So profit would be the balancing figure. Profit would be the balancing figure, and profit is okay. Okay, somewhere I think it comes to, let's explain. Better we'll take a, we'll amend this number a little bit. Okay, we'll put it as 4,50,000. Okay, because we need to have a profit. I think there should have been some typing mistake. So let's see. So what's the difference between this and this? It's 81,000. Now we know exactly like what is the cost sheet for this. Okay, what we have to do is we have to find out how these numbers are going to move, right? How these numbers are going to move from here to this one. Okay, we have to find out for the quotation. So for the quotation, we have like certain expense. We want to produce 1,000 units. Okay, we have to produce 1,000 units. Okay, and we want a similar profit percentage. So our profit percentage has to be the same. Okay, but certain costs have gone up, like the cost of factory labor has gone up by 10%, and material cost has gone up by 20%. So how would we do this problem now? Okay, so that is the crux here. So we'll start. See, the direct material used is 1,35,000. Okay, this cost has gone up by 10%. So 10% gone up means we'll put it as, sorry, this cost is for how many units? It's for 1,500 units. Okay, this cost is going to go up by 10%. So it is 1.1. Okay, if you put this, you will get the cost per direct material per unit you will get. Okay, but we do not want for the per unit, we want for 1,000 units. Okay, for 1,000 units, what would be the cost? So let's get the answer. The answer flows to 99,000. Okay, so we got the material. Next one is, sorry, the material has to go up by 20%. Sorry, that's the wrong thing. Material has to go by 20%. Okay, so the next one is, the cost of factory labor is going to go up by 10%. So again, we can take this. So direct, the cost of factory labor. So it is factory labor, this one. So if you take the existing factory labor cost is 1,30,000, that is for 1,500 units. That is going to go up by 10%. We want to find out for 1,000 units. So let's get it. So we got the amount. So let's add both. It comes to 2 lakh 333. Okay, sorry, 2,03,333. Now we have other expenses. We have factory expense we have to consider. We have to consider administration expense. Okay, then we have to add the profit. So how we are going to do it? So we have to take a ratio. So what ratio we'll take? We'll take a ratio of factory expenses, which is 1,30,000, divided by the labor cost. Labor cost is also 1,30,000. Okay, so this is for how many units? Okay, so if you put this, let's see to what percentage this comes. This comes to, okay, let's see what percentage this comes to. This would come to 100%. So let's get the answer. It's 100%. That means whatever is the direct labor, the same would be the factory expense. So whatever number you got here, the same number you can put it here. So it is going to be 95,333. Right, we got that. So add both, you got 1,49,333. So our next number is going to be administration expense. So administration expense, you can get it as a proportion of your works cost. So we'll try to get that. So 15,000 is a percentage of the works cost, which is 3,95,000 into 100 we'll put. Let's get the proportion. The proportion is 3.3. Okay, one second. Okay, the proportion is 3.8. We'll take it as 3.8. Okay, so when your works cost is this much, of that 3.8% is your administration cost. Okay, so add both, you will get your cost of production, which is 1,55,000. Okay, 1,55,007. So the same number will flow to cost of goods sold, okay, and the same number will flow to total cost, okay, that will also be the total cost, and finally we have to get the sales value, okay. So sales value, he says it has to be the same percentage, okay. So what is the, first of all, existing percentage? We'll try to find out. 81,000 divided by 3,69,000 into 100 will give you the profit on cost, that is 22 percentage. So of this number, 22 percentage will be the profit. So add both, it comes to 1,89,108. Okay, so this is the quotation that we have to give for the 1,000 units. Okay, this is what we have to give for the 1,000 units. Okay, so we can't like directly take the selling price and we can't quote it, because there are expenses which have gone up. Okay, so that will change the profitability of the project, but still we are ensuring that however the cost goes, 20% of 22% of that cost is the profit. Okay, so that's about this sum. We'll move on to the next sum. So this is sum number 8. So in this sum, it's again a tender sum. He's asking the percentage he has given, percentage of works overhead to the wages and the percentage of general overheads to works cost. Okay, so he has given a particular ratio in which you have to work it out. Okay, so as he has given a ratio, we will take that ratio and we'll try to work out. Okay, so we will get the so we'll start. So this sum, let's see like what else they have given. They have given stock of finished goods. So that is like opening finished goods, opening raw materials purchases, wages, finished goods, sales. Okay, it's a sales he has given. Again, closing finished stock and closing raw material is given. Works expense, so that is like factory cost. Office expense, that is going to be like your administration expense. Okay, and they say that prepare a tender which requires 52,000 of material and 35,000 of wages, net profit of 20% on the selling price. Okay, show amount to be given for tender, use the following ratios for guidance. Okay, so it's going to be like similar problem, but in earlier problems we took the ratio to our convenience, but here they have given us a particular logic. Okay, so let's start with the existing sheet. So value of closing stock is 70,500, and so that's going to be opening stock. I think that's not closing stock, opening stock, and opening stock of raw material is 34,000. Purchase of raw material is going to be 7,80,000. Finished goods is going to be 17 lakhs. Okay, finished goods sales is 17 lakhs, and sorry, productive wages was 5 lakhs. Stock of finished goods, so this is the closing stock of finished goods, that is 82,000, and raw material closing stock is 45,000, and works expense is 1,44,000. So works expense is a factory expense, and office expense is 70,000. Okay, so we got our sheet. We'll finish off the sheet in the same column itself. We don't need to separately do it. So our direct material used comes to 7,69,000, and our prime cost comes to 12,69,000, and our works cost comes to 14,13,000. Cost of production comes to 14,73,000. Sorry, 14,83,000. Or cost of goods sold comes to 14 lakh 71,500. 14 lakh 71,500. Our sales expense is not given. There's no sales expense, so that becomes our total cost. And we have profit. Okay, profit we don't need to compute, so we don't require that. So what we'll do is we can now find out the quotation. Okay, we'll go for the quotation. So quotation, if you take, we get 52,000 for the material, we get 35,000 for wages, add both, we get 87,000 for prime cost. Now we have to get these values. We have to get factory expense, okay, administration cost, sales expense we don't have, we have to get profit. So only three numbers we have to find. So the first number is percentage of works cost. Okay, so we'll start. See, so what's the existing percentage? See, the existing percentage works like this. Works overhead is how much? Works overhead is 1,44,000 divided by 2 productive wages. Productive wages is 5 lakhs into 100. So if you put, the answer comes to 28.8%. And now we can apply this. Okay, so that's a percentage. So what would be the value here? Okay, what would be the value here? The value would be 28.8 percentage, okay, of wages. Okay, so how much is the wages? Wages is 35,000. So you can take that, you can put it here and get the answer. Okay, it comes to 10,080. In the same way, we can also find out what's the percentage of general overheads to works cost. So general overheads is the administration expense. That's what he is telling as general overheads. So that is going to be 70,000 as a percentage of works cost. Works cost is 1413,000 into 100. Let's get that percentage. So that comes to roughly 5%. Okay, we'll take it as 5%. So whatever is going to be your works cost, out of that it's going to be 5%. So it is 5% of a number. Okay, so we know what is our prime cost, we know what is our factory cost. Add both, it comes to 97,080. 97,080. So out of 97,080, we can take 5%. So add both these together, it comes to 101,934. 101,934. Okay, we got our cost of production. So now cost of production flows to cost of goods sold. Cost of goods sold will flow to total cost because there's no selling cost. We just have to find out the profit. Okay, so profit percentage, he is telling 20% on selling price. Okay, so again we have already worked out this sum earlier here. I think it is very similar to this. I think it's not similar, it is same. So we don't need to do it again. So the logic is this: assume sales to be 100, profit on sales is 20%. So this is going to be 20 and cost is 80. So we have to find out 20% of the profit, but what we have in hand is the 80% of the amount is what we know. So or else we'll put like this: we know what is our cost, 101,934 into 20% is our cost and 80% is what the cost is. Okay, 20% is our profit and 80% is our cost is. So let's get the number. So the number comes to 1,27,417. 1,27,417. Okay, so this would be our quotation. Okay, so we started with only two numbers that we knew. Other numbers we have taken that as a percentage. Then we found out the profit, and this is our quotation value. Our quotation value is 1,27,417. So that's about sum number 8.